G'day everyone, welcome back to Pete's Investing. Today's April 5th, 2023. This is the S&P 500 update. On the three timelines, the daily, the 4 hourly and the hourly, the CCI 1500 is still in a downtrend, whereas the 4 hour and the hourly are in upswings. So very cautiously going long in the hourly, using the 4 hour as a guide. But notice also it's hitting these support areas, and I'll drill down to each of these. But primarily you want to hope that you want to wait for the moving average of the CCI to be in an upswing or in the same direction as all three timelines to be more confident moving that direction. On the hourly, you'll notice here between that low and that high, I did draw this Fibonacci retracement, and the price did break the 61% barrier on the Fibonacci retracement, and that's always a key area to look out for. In other words, notice back here, if you just delete, I'll remove this for the moment. If I drew a Fibonacci on that smaller range as an example, so let's assume we were here today, I will draw a Fibonacci retracement between that high and that low. You can see there it bounced down from the 50% level. So that's potentially further proof, especially on that bearish engulfing candle, is further proof that the price is still in decline. So as soon as it breaks above the 61%, that's usually the probability that the price is reversing, and it's going to go in an upswing, and that's what it's done here. So if I move, let me just delete that. If I draw the Fibonacci back to where it was, back to that level, and to that high, you can see there it's broken a 60% level, and that's generally a sign of reversal. Now it's actually gone up and hit this descending trend line, broken up through there, and notice it's gravitating back to that descending trend line. It hasn't made it as far as that minor resistance area yet, so that's still valid, and we're going to leave that there for the moment. And that higher resistance was previously drawn for that point up there. So let's go to the 4 hour chart, if we can see any difference there. And again, that's the same Fibonacci retracement. See that's broken above the 68%, so just be cautiously going long. But again, I would only go long. I'm very cautious in my trading. I only go long when all three timelines are aligned. So long on the daily, long on the 4 hour, and long on the 1 hour. In this case, the daily is still in a downtrend, even though the CCI has broken its moving average. I'd still be going predominantly short, especially when the 4 hour and the hourly break to the downside. So on the 4 hour, it's hitting this minor resistance forming, and as soon as that confirms, I'll move that hard resistance down to that where that dotted line is. Looking at the hourly, you can see there more clearly. Now, as I said, this is a minor resistance forming as opposed to that hard resistance up there. Now, if that eventuates and that keeps declining, I'm going to draw a Fibonacci retracement between that low and that line and that high. Now, early days yet, it still hasn't broken the 23%, which is at 40.62. It's currently hugging this descending trend line. So if it breaks much further to the downside, we want to be more bearish. We want to see it break below this ascending trend line, and more importantly, we want to see it break this 61%, which is at 39.35. That's our key area of support. If it breaks below that, then we're looking at more of a bearish outlook. But at the moment, it's sitting up there, hugging that descending trend line. If it breaks much higher than that, we want to see it break above that dotted line to be more bullish on it. But especially to be bullish, we want to see the daily break to the upside with the moving average turning upwards as well. To understand how to properly trade using the average down approach, if you get caught out against your trade, don't use stop losses. Reference the links in the description below. Subscribe and like the channel. Support us more on Patreon, and we'll see you in a future video.